Defining asset category. I'm just going to this definition of asset category and we'll see what we defined. Navigate. Fixed asset super user IT India. Setup. Asset system. Book control. We'll come back again on the book controls. First, we'll see what all we did. Financials, flexibles, key, segments. Okay. Asset. Location flexible. Okay, this has, I'm just repeating what we did, so we will cover up. We have this flexibles, country, state, city, building. And it has values set as PE country, PFF state, city, building. Then we have category. Under category flex field, we have segments. We have two segments, Vision FA major category, Vision FA minor category. But this can be edited based on the requirement of the client. Okay, hard and fast thing. And we have asset key. Under asset key, we have Vision FA asset key. Okay. Now we will see what all the values are there. Select the value set, name. Okay. PA. PA. Asset. Titled asset key. Okay. These are the asset key we defined. Already definition is available. Here we see if we defined anything. We didn't define anything. Use of this asset key is not mandatory. You can, this is an optional field. I'm defining here IT underscore vehicle. IT underscore vehicle. Okay, asset key gone. Then we'll define asset category, vision category flex field. Now we have two things, major and minor. Under the major, what is there? Let's see if we defined anything. Okay, land, building, machineries, everything is there. So we define one thing, IT vehicles. IT vehicles, major category. Okay. Then we select minor category. Minor category. This IT vehicle is the independent value and minor category is the dependent value. So what is the segment under which it will come? So IT vehicles. If we click on find, we have nothing over here unassigned. Okay. We can create variable here, vehicles. Under the vehicles, we add car. Okay. Better add IT car. IT wheels. Okay, we are defining this too. Okay, on the category we defined. Okay, this structure, and for this structure we already defined the location. So now we move to our setup part. Okay, setup, asset system. Under asset system, location. Under location, we'll see We have India. Just lots of things up there. 11. India. Tamil Nadu. This list is saying that we have not defined anything. So let's define one. India, Tamil Nadu, Chennai, IT Corporate Office. It says that the value exists. Okay. F11, F11, INT, Tamil Nadu, for okay, I am exporting this complete data. Look, we have already this one, see, but I don't know why it is not showing over here. Control here. Oh, it is not. INT. Okay. So our location is already there. IT vehicles asset key. We need to enable it over here. IT vehicles controllers. Okay, then we have already defined some book controls. IT corporate book. This is our book, IT corporate. Under this, we define what will be our calendars, depreciation calendar, fiscal year, then prorate convention, ITC calendar. Then the first period, current period is July 21, current fiscal 2021, divide depreciation evenly. Then we have last depreciation run June 30th. This is all we have to give the patient ledger detail, which ledger it is. This is the ledger, and we have alternate ledger, that is the reporting ledger, for which we have the currency enabled US dollar. Then we have the accounting rules. Under the accounting rules, we have some details, and we will see revaluation and group asset later. Then we have natural accounts, under which natural accounts it all will go proceeds of sales, cost of removal, etc. etc. Okay, so this we define the accounting controls. Now comes the category. Okay. IT vehicles, IT car. Major category, minor category. IT car. You define here whether it's a leasehold improvement, non-lease. So it's like non-lease. Enabled, yes. Capitalize, yes. In physical inventory, yes. In physical inventory, if you enable, you will do the generate the report and do the auditing for this category as well. Ownership, owned. Property type and property class we are not doing. Book controls. IT corporate, IT C corporate. Asset cost C1 CHN. Now we have to see the accounting. Okay. We have 1550. Enter company setup, future table. This comes the cost, set cost, asset clearing. This we use when we do the retirement or any addition. First, any accounting entry will hit the asset clearing, then it will go to the cost. Now we see we have added vehicles, asset clearing. Simple one account is there. Yes. Then we have the depreciation expenses. Depreciation expenses and accumulated depreciation are two things. Accumulated depreciation is the liability, and depreciation expenses is the profit and loss item. Depreciation. Okay. We have depreciation vehicle 7350. Accumulated depreciation. Accumulated depreciation vehicles. Okay. Bonus expenses, bonus reserve, we will later see. Revaluation reserve, if we are doing to do the revaluation for our fixed assets, suppose we purchased the car for 2 lakhs and after 3 years it need to be completely depreciated, but it is under very good condition that it can again fetch us another few bucks, like it is going to be sold as 1 lakh, 2 lakh, or more than 2 lakh. So in that case, we do the revaluation. Revaluation reserve 1670, 1680 as a revaluation amortization. 1680 revaluation amortization. Okay. If it is a okay, owned asset, so we do not have this CIP or CIP asset clearing, everything will come. Okay, this is not mandatory items. Then save it. Okay, it is asking us to default depreciation rule. Click on default rule. Okay. Date placed in service, by default it is coming over here. The first gen depreciation method. Okay. We have this many depreciation methods defined over here. Okay. We have flat rate 5 years, flat rate 3 years. So I'm just selecting flat rate 3 years. Okay. Life I am putting 3 years, 0 months. Our calendar, ITC Prorate Convention, IT Retirement Prorate Convention. We have not defined any bonus rule, so that is not required. Salvage value percentage. If we give here any salvage value percentage, that amount will be reduced from the depreciation calculation. Here we are not defining anything, so flat rate sheet. So we will go and see what all the conditions are over here. So this asset category we defined IT vehicles, IT car. Depreciation. Go to depreciation methods. Okay, this is the rate. Method is calculated. So it is all this formula is there. Table, production, flat rate formula. So we have selected the calculated. Calculation base is the cost. And it is a straight line method. depreciate in the year retired, straight line method. Life is 3 years. Okay. So it will calculate by default itself. The life is 3 years from the date of place of service, and it will calculate based on the cost. Here I can select the exclude salvage value, include salvage value. So what it will do, what will be the cost? Let's say cost is to 3 lakhs rupees divided by 3. It will be coming 1 lakh per year. 1 lakh per year again will be divided as per the prorate convention for every month, and it will be there for every month. So we will add the asset to our book now. We have covered all the basic setups required to do it. Asset module enabled. Now we go to assets, asset workbench. Quick additions and addition. This is a detailed addition. This is a quick addition. We click on asset number. Asset number ITC001. That's it. Depreciation. We put it as a BMW car. Tag number we have nothing. Asset category IT vehicles. IT car. Okay. Asset type is capitalized. Asset key, you see here, it is optional. IT vehicle. How many units? Unit, just we have one. Manufacturer model, we say BMW C380. Okay. In use, in physical inventory, own, bought new, and click on continue. If we click on continue, here we have to give our book. What is the current cost? Let's say 30 lakhs. Okay. Year to date depreciation. Current cost is this one. If we have old, it is coming from old system, and you want to bring all that values here, then it is very well possible. Year to date depreciation, accumulated depreciation. So what happened? If your purchasing is new, then it is put to use in the first phase, so it is not required to put anything on the YTD and accumulated. Suppose it is coming from the last 2 years, and you have already depreciated some values. So in the accumulated depreciation, you have to put the figures till the month of January, till the month of June, from the very beginning. Suppose you purchased this car in 2018 and now it is 2021, you have to put accumulated depreciation total in here. And YTD year to date depreciation means for the current year, Jan to June, you have to put the amount over here. So right now we are saying it is a very brand new, and we will not be touching this details. Net book value 30 lakhs, all good. So here depreciation method based on the book controls, it is already here. Flat rate 3 years. Okay. Depreciate date in service. Date in service, we change it. We change it to 1st of July. Okay. Prorate date 15th of July. It is taking prorate date means the depreciation will be calculated for the 15 days, and it will move next 15 days in the retirement period last month. We'll see how it is working. Then group asset, we have nothing. Short financial year, no. Impairment, nothing. Depreciation. Click on continue. Okay. Now here you have to assign this car to your employee. It is very well can be done. If you want, you can assign the employee, otherwise it is not mandatory thing. Gopalji, fine. Expense account. It is the expense account, depreciation vehicles. C1, CHN. Okay, this Mr. Gopal Titwania is from the Department of Finance. Click OK. And now it is asking us the location. Under which location it is. Why it is not showing our location? So this is actually asset location we have to give. So expense account we given all these details and click on done. So we have added our first asset. If we now go ITC 001, click on find. It is here our asset. Okay. From this window, you can add quick addition. You can see the source line, books, open, financial inquiry. If you do financial inquiry, it will bring us the details like under which book. This is the IT India US dollar and this is IT corporate Indian rupees. Okay, on both the books it is showing the value and see 30 lakhs date in service 1st of July, IT supported depreciable investment credit, nothing. These are the financial inquiry. Cost history, we have added this via this reference number and these are the details. And when we start running the depreciation, it will show the depreciation also. So first asset we added. Now we move to the running of depreciation. Okay. We can run projection of the depreciation. This will give us the projection like what will be the depreciation. Okay, starting period and all this we have to click on run. Report submitted. How many times you can submit this report? There is no issue. We'll see what this details are coming up. It is done. We'll see view output. On the view output we have here. See. Company C1 expenses account for ITC July, August, September, October, November, December. We have totally this much as a depreciation total going on. Total 5 lakhs rupees for the period. And this will be the accumulated depreciation 5 lakhs rupees, report total 10 lakhs. Okay, these are the two different accounts. Sorry, the same account, but the details is like this. Okay. We can see now the depreciation, run of the depreciation. ITC corporate book period is July. If you want to close the period, then you select it. Otherwise, just run it. Okay. Don't do anything. What it is going to do, it is just going to do the calculation of the depreciation and post against the, not to going to post any journal entry in the GL. It is just going to run the depreciation and show it against the assets. It is a kind of draft running of depreciation. It is not a final run of the depreciation. If you run the final, it will show against your asset. Okay, depreciation run is complete. Now we go to our asset workbench. The first window opening is for just to find your asset. So ITC 001, you can find. This is the asset. We'll see financial inquiry. Financial inquiry see for the period of July. This is the depreciation amount for US dollar. For INR, we have over here this one. So for this 30 lakhs, the depreciation got calculated. This is the addition of 30 lakhs rupees, and this is the detail of depreciation. So it is the flat. So let me show you in the calculator. 3 lakhs, 30 lakhs divided into divided by 3. So total it comes as 10 lakhs. On the 10 lakhs, we have started the depreciation from the period of July. So for the year, what is the balance left? We have balance left is, let's say, 6 months, total 6 months. So divided by 6. Sorry. 10 lakhs is for 12 months. So divide by 12. So per period depreciation coming 833. 833. Understood, Lavanya? Now,
Yes, sir.
now we are okay. We understood that depreciation is calculated correctly. What you have to do, go to the depreciation. Sorry, run the depreciation. Okay. Once you select this close period, it is irreversible. You cannot do any changes. This program closes the period and you cannot reopen it. This is a warning. If you are okay, you run it. If you are not okay, you simply run the depreciation again and see what is happening. I'm closing the July period, so it is going to post the journal entries in my. This is what if analysis, like if you want to change the depreciation method, or if you want to change the depreciation rate, if you want to change the years of life for the asset. All this can be done. Okay, this is for Japan extended depreciation. If you see, it is it says that expense account is 7350, reserve amount account is 1650. So all completed. So now we can go in our general ledger and see the depreciation details. GL Supervisor IT India, journal entries, and we say ledger INT, IT India ledger, source assets, you can find. I forgot to okay, still it is not posted the details because we forgot to run this program. Create accounting assets. Our book is this one, ITC Corporate, ledger, process, and date. And date means till what date you want to see this, no errors. Report detail one. Transfer to GL, yes. Posting to ledger, yes. Include user reference, yes. Okay. And submit. So we submitted the accounting process for our depreciation, addition, all this. It is going to transfer all the details. We added 30 lakhs rupees for the car. It is going to transfer that, as well as it is going to transfer your details for the yes, we are going to wind up it by 8. We are just completing this. We will not be taking much time. We are just checking the accounting entry and we are almost done with the fixed assets. So it is all completed. Now we can go and see journals, enter journals. In the IT India ledger, asset category, click on find. You see here two additions, one addition journal entry is there, one depreciation journal entry is there. We go on addition, review journal. It says that fixed assets to fixed assets clearing. Okay, asset clearing account to asset. Because we added the asset directly. Now, when we this kind of entries will happening when we are transferring the data from old system to new system. Otherwise, when you purchase a new car, definitely you will have accounts payable invoice, and that accounts payable invoice will be the trigger for booking all this asset. So we will see that part tomorrow. We are going to continue this week everyday classes. There is no alternate week. So tomorrow we will see how the asset can transfer from account payable to fixed assets module. Okay. And here we see the depreciation. Click on review journal. It says this accumulated depreciation account credited to depreciation account. Okay. So this is how it is going to work. Assets. In the assets, we have normally asset addition, depreciation. We have asset retirement, and we have accounts payable, that is the called as mass addition. So we will see tomorrow mass addition and the asset retirement. Okay, Lavanya.
Okay, sir.
Okay, so we wind up this session and we'll start our session for tomorrow. Okay.
Okay. Yeah. Thank you, sir. Bye.
Thank you. Thank you very much.